Hey everyone, in today's video, we are going to talk about Capitaland Ascendas REIT. And to be fair, when I was analyzing this REIT to generate this video, it made me so sleepy and it's so boring. Okay, I'm going to try to make it very interesting for you guys. All right, and so let's dive into an investment. Capitaland Ascendas REIT. It is a Singapore-listed industrial real estate investment trust, right? So industrial real estate means very robust. Tenancies are relatively long, lower turnover of its tenancies, and it's done well in periods like the pandemic. Okay, so you'll be owning assets, science parks, light advanced industrial assets, data centers, and logistics centers across the region. And what's wonderful about the REIT is that about 70% of the property exists in Singapore, all right, and about 10% from Australia, 12% from Europe, and the United States is slowly increasing at 14.3%. Okay, this is a huge REIT, 12.3 billion of market capitalization, price to book value a little bit pricey, 1.19 times. Okay, the gearing is relatively low at 37.4, no drama there. And the debt to equity ratio is about 62.5%, right? The interest coverage, including perpetual bonds, is between 3.5 to 3.7. If you compare that with my previous videos, it's on the decent and higher side. Okay, the minimum is 1.5. So it's a very safe investment to have. That's why I say it's extremely boring. I have a small position in this REIT, but I'm currently accumulating it right now. Over time, as I get older, I will be replacing one of the riskier real estate investment trusts with something like Ascendas REIT because it's got a very strong, powerful sponsor. The cash flow is primarily from Singapore, and so it ticks almost all the boxes when it comes to safety and stability. All right. Well, safety and stability does come at a price, and I think the data is not exactly very clean at the moment, right? It has a dividend yield of about 2.8%. Okay, okay, there's a typo here. It's supposed to be a Ascendas REIT. The trailing yield is about 4%. Okay, some websites claim that the yield is about 6.1%. So I went in and I did some hand calculations of the dividends for the past 12 months. And I got about 3.8%. So it's not exactly a REIT that is rewarding the investors at the moment. You might want to hold on to it for a year or two to see whether the dividends do pick up after a while. Okay. Now, if you look at how cheap the REIT is, okay, when we use a ratio like price to funds from operations, then you will find that for Ascendas, this is actually quite reasonable. All right, at 16.58, ranging between 14 to 17, right? It should be how much you should be paying for a real estate investment trust based on PFFO, right? And in comparison for AIMS APAC REIT, okay, that I've done the video earlier, which actually generates fairly high dividends, it's going at a PFFO of about 24.6. So actually, really no harm owning something like Capitaland Ascendas, all right? So as a REIT, this should still be a dividend yield play, although the numbers are not showing it right now. I would hold on to it to see whether is there any yield compression. If the yield compression is too high, that means maybe 2026, you're really getting less than 3% for this REIT, then maybe you can cycle it out and pick something else that would give you a better dividend yield. Okay, but at the moment, I think 2.8, it might be corrupted data, or the data doesn't really factor in the amount of money that's coming out from the real estate investment trust. Okay, historical returns are fine. It mirrors the performance of the STI because it is a fairly stalwart component in the STI, 7.8% for the past 10 years or so. Standard deviation of 20 is reasonable for single counter, right? Interestingly, an annual skew that's positive. That means it actually melts up, when it's doing well. Okay, drawdown of 33% comes from the pandemic, where the high quality real estate investment trust also crashed more than 30%. All right, but when you compare it with the S-REITs ETF, the performance is excellent, right? The performance is excellent. The S-REITs ETF has returned 0% inclusive of dividends. Okay, And so, what can I say, right? It's really one of those real estate investment trusts that you find in every older dividends investing uh, uh, guru or sifu, okay? Right? Because it's almost like you can't go wrong putting this into your portfolio. So how do you think about Capitaland Ascendas, right? Analyst view at the moment is overwhelmingly positive. The target price, there is plenty of room to get to the target price at about $3.07, $3.10. There's unanimous buy side support. That's why I say I almost fell asleep, right? Almost zero negatives for me to drill into. You know, I can't focus on anything that is bad, so that when we do the shallow dive, we always think about that when we invest in the company, right? Assets of high quality, it is mixed, okay? Uh, uh, Liquidity tailwinds, deepening Singapore presence, okay? Ticks all the boxes, okay? The REIT has scale, heavily diversified across different geographical regions. It is like everybody hopping into the bandwagon, getting into data centers and the AI revolution, okay? And Capitaland is the strongest sponsor in Singapore. Yeah, I would think Capitaland is probably stronger than Mapletree, even though they're both very strong. The weakness obviously come from the lower dividends yield that I have flagged earlier, right? And it's always a problem, right? If you want to look at things like Capitaland Ascendas REIT, it's very similar to Parkway Life REIT. Ticks all the boxes, but because of this, you know, the dividends is very low. So actually, you're paid lower to actually own the stock. Okay, so opportunities arise from data center expansion, asset enhancement initiatives, and rental reversions have been pretty good. Okay, and there is a little bit of forex risk, right? 30% of the assets don't come from Singapore. So if the Singapore dollar were to strengthen against the Aussie and the US dollar, you know, you might see a little bit of drop in the TPU. So what do you want to do before making a decision? Okay, now remember that this is a very boring investment. Okay, just add it into your portfolio and then maybe focus your life on other investments, right? It should, even if it doesn't do well, it wouldn't lose you a lot of money, right? It's important to demonstrate REITs like this in an occasional video to tell everybody that stability comes at a price, okay? And dividends might have been very low because people pay a premium for stability, okay? Now, if you want to do any due diligence regarding Capitaland Ascendas REIT, you might want to focus on the strength of the Singapore dollar versus the rest of the world. When the tariffs begin to kick in, the Singapore dollar is actually in a very strong position because we are facing the lowest tariffs compared to the rest of the world, right? But a lot depends on whether our leadership can navigate through the pharmaceutical and the semiconductor tariffs over the next 3 to 6 months, all right? So I would be following very closely news on our task force man and whether he can succeed in getting these pharmaceutical and semiconductor tariffs downwards. All right. Okay, so the REIT can underperform if the Singapore dollar strengthens relative to other currencies around the world. And so that's all I have. If you like my content, you can subscribe to my channel. You can buy me a coffee here. You want to listen to my life story, Google ERM intro, take the first link, and I'll see you at the next video. Thank you very much.